The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, we're going back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN, TFNN.com, and TFNN.mobi, feeding live and directly. You can see the screens. The traders, 9 hours of live trader commentary each and every day. And we're doing some trades this morning, had a lot of fun, and made a lot of money on the Bull-Bear Binary Hour. So I hope you were able to join us and possibly even join us in on some of those trades. We were taking them out and had over 100 contracts. Actually, I had 100 contracts on that. I had some hedge trades on. And we'll see if any of the hedges do anything, but, gave up a very small amount of my profit just in case we were wrong or just in case it flew on back. But the hedging worked out. Hedging was awesome with it, and then the contracts just perfectly ran right to the expectations. And we'll walk through that step by step for you here in just a moment, okay? We got the S&P. The S&P right now is up 0.5 point. The Russell is up 5 points. We have the Nasdaq up 1 point of the day, and the Dow is down 15. What's up with that? We got NFP coming out, and, man, the non-farm payrolls are great. They're better than expectations. They revised up the last number. Unemployment rates dropping down and going low, low, low. And what's up with the market? It's pretty simple. The numbers don't mean crap because we had the largest drop-off of participation in the workforce take place in April since January of 1978. Okay? Long time ago. Meaning 88 million people dropped out of participating in the workforce. 188,000, sorry. Almost 1 million. Dropped out of participating in the workforce in just the last month. Why is that? Well, obviously you had the baby boomers retiring and all that, but you also have people coming in. I mean, the new generation's bigger than the boomers are, okay? So, your Generation Y or Z or whatever it is now, they're bigger than the boomers. So people talk about how big the boomers are. It's like they're actually larger. And so that's not really it. I mean, yeah, they're dropping out, but other people are coming back in. And they're coming out with degrees, and they're making less than, acceptable wages. But what's really the problem? Now what's happening is all those unemployment benefits that get extended for infinitum are not being extended. And so people are dropping out of looking, because they got to be looking to continue to getting the unemployment benefits. And so those numbers are now showing up at once. But they don't show up in the unemployment number because they're no longer unemployed. They're non-participatory. And non-farm payroll is just numbers added. So it's not numbers like layoffs, ads. What's the net positive? Net positive number. It worked really well. That's great. But the unemployment rate really is not accurate because it doesn't include so many people. That's why it improved. And so the market knows the real number, the real truth behind it all, and is not impressed, and has decided to not really participate in a massive rally based on this insufficient report. And so as good as it looked, it was not that fantastic. All right, so we have that. Let's go ahead. What else we got? We got copper right now. Copper moved up 1.5% today. We got gold moving up 1.3. We got silver moving up 2.5. I mean, the metals were where it was at to trade today. Definitely a metal day. Looking over at natural gas. Natural gas right now is down a little over 0.5%. We got, which is a slow day for natural gas. We got oil is currently up 0.4. We got corn is down 1.5%, down 7 points. Nice move right there. And looking over at soybeans, it is up 5.5. Euro dollar currently down just 2 pips. Wasn't it NFP day? Aussie dollar down 14. Dollar franc down 26. Dollar CAD down 5. Dollar yen up only 24. We have the Aussie yen up a mere pip. Aussie yen down 18. Euro yen down 1. Pound yen down 4 pips. Euro pound up a mere 4 pips. And I don't know if you were listening to the show yesterday, but I went through and I talked about the NFP, and I'm like, as much as we all think it's a big event, here's the reason why. Because we remember those 1, 2, maybe 3 big events in the last 12 to 24 months. But usually, it is not a big event. So how do you trade it? Because you don't want to trade into the number and get slaughtered on it, right? And what can you do? Well, I actually, there's only a couple possible pairs I actually consider going in and actually trying to straddle. So let's see what they even did today. And they're not even that impressive. We'll go back, we'll look at them in a second, okay? And we'll pull up, Euro pound and pound CAD and all that. Pound CAD actually had a nice move. That's good. But most of them, I'm going for neutral trades, okay? And, you can take them all the way out to 3 p.m. at 7 a.m. You can get the 3 o'clock spreads. And so I wanted to look at that with you today and show you an example. And so let's do it. Let's pull it up over here. And let's look at these neutral trades. And so let's say we're looking at pound dollar. And I go over here to the Forex bull spreads. And I go to the pound dollar. And then I look at the 3 o'clocks that opened this morning at 7 a.m. And then when they opened on up this morning at 7 a.m., then what was the price at 7? The price was right around 66.70 or so. They got it at what, 68.70, I mean. See, that's right, they have them right there at 68.70. And so what could I have got on it? So what I'll do is I'll go over here now and I'll tear off a couple charts. So we'll tear that one off. Bring it down a little bit. We'll go here, we'll tear this one off. Look at that. All right. So now we got our charts going. Right here. And what would I have been able to bring in? Would it have been worth it for me to do the trade? Well, yeah, definitely. But let's see if the math added up at least. Obviously, the trade worked out awesome. But let's see. At least if the math came together. Okay, well, how do I figure out the math? Well, let's look at it at 7 o'clock. Let's see if we can even get that data. If it'll give us a little further back here. There we go. Okay, then we're going to zoom in to what we actually need. And yeah, that looks like the chart is in the weird, but let's see, what do we got? Yeah, it keeps pushing itself over to like 11 a.m. That's not really helpful. Let's see, come on, try it again. Okay, that's better. I don't know what it was up with it. But, does that show me the indicative? Yeah, that's the indicative. Okay, hold on. Try one more time. And give me the whole chart. I'm actually building right now. We're building a database that is going to allow us to go in and we're recording it now. We're going to be able to recreate these charts automatically to look at any strike, any binary in the past, any spread. So that way we can easily backtest stuff, compare stuff, and have a little more reliability, like when you're trying to do the same thing, things like this. And if it doesn't give it to me, I'm just going to have to explain it to you. I could also show you a place where you can see what some people did. which is pretty cool. Yeah, see, they're starting the data at 11. There's some issue on their data feed. Okay, so let's go over here to Nadex, and I wonder if they're using... It's like I am on the 3 p.m.s. Yep. Yeah, it's like it's pulling like the 1 to 3s or something. I'm not sure. But over here on Nadex, you can hop on down and you have time and sells. And on time and sells, you can actually find specific contracts. So let's say we're looking for just a 68, 70 to 70, 20 contract. Okay? So if I click on that, I can go over here and do a little search on it. You gotta get the exact format down that they're using. Like they may have a space or whatever on there. So we'll scroll down. Let's find ourselves a spread. Once we find one, then we can put the pieces on. Looks like they have them in different orders. Man, people are doing binaries like crazy. There we go. Okay. And a lot more volume. Once I can find a spread on the time and sells. Let's see. They may have updated the report because we have 4 reports we're pulling now. Come on, a little further. Looks like their time and sales is just reflecting the binaries. I know they have one for spreads too. Just trying to find it. Okay, see, like right there. No spaces. Got no spaces. Let me do a search on this. That will let me know. To me, this is the easiest way to find it because there's so many contracts on here. See, okay, so we got 19 to 21, like the format. You can also go to, say like GBP/USD space, and then, what contract do we want? Here are all the pound dollar spreads actually that have been traded today. There's like a 66, 70, 61, 70. What time did that one happen? That got executed just a little bit ago. Like right there at 2 o'clock. That was 8:30. Okay, so that's somebody actually got in right, like 5 minutes after the news announcement. They hopped right in on that trade. So I was hoping there's going to be a price we could pull right off there, but I can still walk you through exactly how it works. So we'll be right back right after this, okay?
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. And so we're going through, we're just talking about, these neutral trades in the market. And so we want to make sure we walk you through different pieces of how to trade Nadex. And with that, what you can do is you can trade neutral. You don't just have to trade directionally. There we go. That'll be a little bit better. You can trade neutral. You don't just have to trade directionally. And if you haven't figured out how to do that yet, if you're wanting to learn how to do it, hop on over to TFNN.com. Click on the Nadex banner over on the right side of the page, okay? Right there. Click on Trading, Demo Trading Account. And then click on Trading, Demo Trading Account right there. You'll then be able to see the username, first name, last name, phone, email address, all that fun stuff. You'll be able to see everything you need to be able to sign up for an account. And it takes about 5 seconds. You click Apply for Demo. Once you do that, then you will have access, and you can literally log in right away. Just check your email and your password to be able to log in, because you made your username, but your password to log in will be in your email. And then once you log in, just update it to something you'll probably remember that's ideally secure as well. They're going to give you $25,000 funny money to play with, and take that money and just play around and have fun. Hit buttons. See how things work. Okay, first goal. Just start doing things and seeing what's happening. Start coming up with questions. All right? And don't make any assumptions in the sense of don't go, oh, well, this didn't work because of that. Go, is this why this didn't work? Is this why that didn't work? Like my theory is this. Am I accurate? Versus saying, don't make it like your conclusion. Make it your theory. Make it your hypothesis. I did this and this. These just don't seem to move fast enough. Or it moved, but it didn't seem like the price didn't even seem to move at all. Or why did I lose that much? Or how do I get out of the trade? Or did I do that right? Like, start thinking about the questions that come up. There's a bunch of education. If you go over to the Nadex channel, you can check out their YouTube channel, youtube.com/Nadex. You can check out the education on their site, but also you can check out the tools and, of course, the show that we offer over here on TFNN to help you out with trading Nadex. And like the scanner, the binary scanner, the spread scanner, the deviation levels, and all those different things that can help you out. And it's not just trading Nadex. You can use this for trading. Once you learn how to do this, you can hedge like crazy. I did a trade the other day on the air. We were just I want to say it was like $35 or $45 on an S&P trade. We made $400 or $500 on it. And we had a 10-point stop loss on a S&P futures contract. But we actually only we weren't even risking a whole point on the trade. Because we were combining spreads to hedge our trade off. And so we had, no stress, low risk, and a trade that made an incredible amount of money because we combined two instruments together. And very, very cool way to trade. So, anyways, but check that out, see how that works, and hopefully I can, help answer any questions that you do have and help you put certain pieces together that might work out for you. But you can also log in, and once you're in there, you can ask questions. You can call me, and I love to take calls. Give me a call. Let me know what questions you got about trading Nadex. You're trying this out. You're trying to figure that out. But it's a very cool way to trade. It's a different way to trade. Basil was talking about that today, and he's like, it's sort of a different way to trade, but it's pretty cool. Because you got really low risk and incredible profits, and you got to. But it's not just that. It's not just like, oh, it's just easy. Like, you want to really know how to put the different pieces, together when you're trading. You don't just want to randomly pick a contract. That's like saying I'm going to trade calls and I'm just randomly going to buy a call or a put. That isn't going to work. You have to know which one you're buying, why you're buying it, how it works. But I help you learn all that. And between all the educational resources available for you, very, very simple, very easy to do. So if we were looking at that idea, we were looking over at the pound dollar, and we were trying to put those pieces together, what would that look like? What would an iron condor actually look like? So we're going to talk about that when we get back from this break. Okay? Stay right there.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're going back here to the Diagnostic Trading Hour. Let's see here. All right, so yeah, we got all this gold contract closed out. Pretty much finished right at 1302. So, right on the dot. Pretty sweet. Okay, so pulling up, looking at these different markets and talking about, you know, what if you went in and traded, you know, pound dollar was like one of the examples I was giving earlier. And you're doing something just as simple as let's see here, just a really, really simple iron condor. How does it really work? How do the pieces work? Okay? Well, the way it works is you just buy a spread below and sell a spread above. So just to give you an example, just to, make one up for you for a second here. We'll go in, and there were spreads right at this price anyway, so it's not completely making it up. But basically, you'd be buying a 68.80 right here. Let's say you got in at 7 o'clock, okay? And that goes down to, let's see, I'll get you the real strikes. We had those up a moment ago. Okay, we had 68.70 So I thought that was a little bit higher, but yeah, okay, so 68.70, which makes sense because that's right about where the market was. And because they said about 10 minutes before the market opens. So 68.70 pretty much lines up. And it went on down to 67.20. Okay? So we're like way down here. And then we go in here and we do another one, but we do it just right above the market. Right there. And what we do is we do sort of the opposite of what would seem to make sense, especially if we're NFP. And we sell the upper one. Change that color, make it a little easier to read. We sell the upper one and we buy, okay? We're going to buy the lower one. And when we do this trade, we're like, all right, so I'm going to sell the upper, buy the lower. And this one you're actually going to get quite a bit on because it's very, very inflated with premium. But let's just say there's, you can get about $30 to $35 in today, which would be ridiculously low. But let's just say it's all you got was $35. Okay? So 68.70, and subtract 35 from that. That's going to put us at 68.35. Okay, so we're going to buy right there. This is the price we're buying the lower spread at. Then we're going to sell at 68.70, so that's going to put us up at basically 69.05, like right up here. And we're going to sell right there. Well, I can make up to $35 here, and I can make down up to $35 going down to here. So basically the center zone, like this is my mat, like anywhere in here, I am definitely, like I'm making money. Well, can I make money further than that? Yeah, because remember, if I lose 35, let's say I sold here and the market ran up and kept going, I'd still make my 35 here. So I actually get to make I can actually make money 35 pips higher. So up to 69.40, I can make money. And if I go down here and I'm down here at like 68.35 and subtract 35 from that, then that'd be 6,800. So now what I find out is my break-even zone, okay? I will break even or make money the closer the market gets to the center from this zone. So basically I'll make $1 every tick up from right here, from break-even. I'll make $1 up to $70 on the trade, $35 on both sides. And so now I can get that zone out of the way. I don't even need that one anymore. So anywhere in between here, I'm actually going to be profitable. If it goes outside of this zone, by the way, if you didn't quite catch that, that's 70 pips up. Okay? Maybe it should be 70 pips if I drew it exact. But it's 70 pips up, okay? And it's 70 pips down. There we go. So we got 70 pips up. And we also have, like I said, 70 pips, going down over here. Right there. That gives us a 140 pip wide high to low range on the pound dollar that we will make money if it stays in between that range. Okay, 140 pip wide range. I like those odds, especially when I know that the average move in the pound dollar at most is about 100 pips, but really realistically over the last year has been about 60 to 80. So right around 70 pips has been the average move, and that's the extreme move. That's not the ending move. Usually it hits that and it comes back. So if I would have done a straddle on this, I would have just got past my little break-even point on my straddle, and if I didn't take some profit, I would have been wiped out on it. Okay. If I did a iron condor on the inverse, if I would have did a neutral strategy on this, then I would have pretty much made max profit on the trade. So I would have just give up just a few of those ticks. So about $65 out of $70 you would have made. You would have kept. And that's trading pound dollar neutral, meaning stay within a range ahead of the FOMC or the NFP announcements. So FOMC, obviously, we had Wednesday. NFP, we had today. Right inside that range. Implied volatility is high. Premiums pumped up. break-even range is huge. Only losing $1 a tick if it goes outside of it. I mean, it would have to lose $70. It'd actually have to drop another 70 pips. Okay, we're talking about going down to like 67.30. So, I mean, we're talking about going like more than pretty much double its expected move for me to have a 1-to-1 loss on the trade. And so by using news to know what these expected moves are, I then can go in and place these trades with high implied volatility, get a lot of premium for them, have a really low defined risk, and take advantage of them. And it's just, it's pretty sweet. I mean, it hasn't even expired yet. We still got till 3 o'clock. So, I mean, we got to get that max profit because we're pretty much right at that 67, 80 point, or 68, 70 point. We're 4 ticks off of it. And realistically, you may have already closed your trade out because there's not a lot left in the trade. It looks like the current pricing on it is, let's see, we're 6 ticks from buying back. So there's like $6 out of the 35 on the sold one, and then the bought one, it's at 68, 66 on the 68, 70, so like 4. So we basically right now you are $11 away from max profits. If you run in 70, then you're up $59 on the trade. Now that you could have done 1, could have done 10, could have done 100. So just however you want it to do, right there. And especially those because I really don't plan on getting out of them, so I don't care. It's one of the few trades that I actually hold because it comes back so often. It's just not even worth worrying about. And the couple times it gets hit, the loss is not that great compared to the profits that are made. And now, if you didn't catch it, I was talking about this on the show today, but Nadex has got some new market makers. Yep, and that means they got a lot more liquidity and they got tighter bid-ask spreads. So let's take a look at that and see what I'm talking about. They've added on 2 more market makers now here in the last couple weeks. They had it on 1, they put another one on. And so it just keeps going and growing there. And you check this out. You click on the link. You can actually see, if you open it up, you can see the depth. And it can be deceiving because you see there's only 25 contracts. That's the best quotes volume. That doesn't mean that's all that's there. And notice it tightened it up by $1. So 25 right there. That's $1. Buck doesn't sound like a lot. Do 100 of them. That's $100, right? So only a $3 wide bid-ask spread showing at the moment. And you'll see them pop back and forth, and you'll see them get really tight. Right now, it's not even $3.25 wide. They're competing, so they're going in there and they're going for they're trying to get their fills, and they want to get that fill because they bought at the offer, they're selling at the bid, they want to be able to get in and out of their trade, and so you'll see the competition. Right here you got $2 wide. You got a trader coming in. They're making an even tighter market on top of the market maker, and. So right there, it's 25 cents wide, bid-ask at the moment. Even with the market maker, if they took that out, I mean, you're talking $1.50, $1. So, I mean, if your issue was bid-ask spreads, they are tightening up. Commodities doing awesome. You're seeing the indices doing really well. Forex, I'm waiting on that to tighten up a little bit more, but I'm not waiting on trading it. But I'd like to see some tighter spreads, some more depth over in the FX markets. But I know they're working on adding that in as well. But the cool news is they got those indices going and they got their commodities going, and they got depth. And it's not just it's not just dailies. I mean, you got intradays right here, 25, 40, 80. I mean, so you can see different levels, different market makers hopping in there, and obviously tightening things up quite a bit. Because if they weren't there, you'd have this 29.50 by 38 market. You'd have basically a $8.50 wide. Right now you got a $6 wide, so it's shaving a couple bucks off of that spread. Meantime, you're looking at the gold contracts this morning. Can't even pull them up now because gold shut down. But closes at 1:30 along with the floor of the pit. They have the same closing hours as the pit. But we're noticing hundreds and 200s and 50s and 25s, and we used to never see that. It was like a 20 and a 40. So now there's actually some volume there being made, which is pretty cool. And but yeah, you'll definitely see things tightening up a lot. You'll see a lot more, competition for that best bid and offer, and you'll see it hopping up and down. And you can see right there. I mean, you can just see them battling it out back and forth because you'll notice the 25 go above the 60, go above the 100, and as the market's moving and everything else. And so you can also notice if you go here and you look at some of these right there, they're competing, and it's who's going to win. So, or the 100 and the 25 may be at the same price. So you can basically figure out how many market makers are in there just by looking at that, consistent depth level. And right now they got 3 going on, and hopefully they'll expand that out even more to the Forex markets. But I'm excited that we're seeing that depth already. And I want to say they do have one of them already making some extra markets on the FX, and so they're bringing on more. They're working on ags. I know they have a market maker they're working on that specializes in ag option markets as well. And, if you're a market maker or you're interested in being a market maker, give them a call. I mean, we want you to – I want you in there. There's plenty of liquidity that things growing. They've grown 100% year over year. I just put up an article up on Yahoo Finance about they're on track to grow 400% this year. They were 400% last quarter over the first quarter of the last year. So they are definitely expanding very, very rapidly. Traders are catching on, and they're liking it. And, it's just a matter of traders figuring out what it is, how it works, how they can take advantage of it. And as they do, then there's more traders do it. And they tell other people about it. Have you checked this out? Have you tried it? And as more traders come on, more market makers come on. And as more market makers come on, more traders come on. And it's like this liquidity attracts liquidity. And it keeps driving it down. I remember I had this on one forum. I was talking, and some guy's like, man, I want there to be a bunch of binary exchanges so they can compete against each other. And I'm like, that is ridiculous. Okay, I understand maybe having a couple, but market makers are going to have to split their liquidity between multiple exchanges. And especially on like a binary contract, there's contracts every hour and stuff like that. They got to try to line up the strikes, and they're not going to be the same. They're going to have different settlement methods, so it's not going to be the exact same as laying off risk. And I'm like, I'm all about free enterprise, and I'm all about competition. But I understand the reality is more market makers on one exchange equals better bid-ask spreads. More exchanges does not equal, with one market maker on each, does not equal better bid-ask spreads, because they can't tighten the bid-ask spread unless the liquidity is there in order to unload the risk and trade delta neutral. So it's not a matter of the exchange trying to charge more. And I think a lot of times that's people that come in, they don't know options, so they're like, oh, the bid-ask spread is this. And I'm like, well, have you compared them against CME E-minis? Because they're actually tighter. Okay? Or they come in and maybe they're coming from a binary option like bucket shop, over-the-counter, non-regulated, non-CFTC regulated, maybe a fake Business Bureau of Cyprus regulation or something, but not any real regulation, and they don't understand the difference. Like Nadex is not trading against you, okay? Nadex is an exchange. It's like the CME is not trading against you, all right? Forex traders are, other traders are, banks are, fund managers are, but they don't know who you are. They just see a trade. They see the transparency, the pricing, the transparency of the size, and they decide whether or not they want to take the trade. But they don't know who you are. They don't know if you're getting in, you're getting out, you're making money, or you're losing money. When we get back, we're going to have a question from Mike about gold from this morning's show. So stay right there. We'll be back right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're back here to the Diagnostic Trading Hour. Got a Mike from Dallas right here in my hometown. What's going on, Mike?
Darrell, listen, I wanted to tell you, your trade this morning on gold, I did it. I went in at $9 on per contract. Darrell, I made $900.
Cha-ching!
In about 4 minutes. And you and Tom both said, well, we're looking for 1302. But this was at the very beginning. I mean, we were 15, 20 points away. How did you know that the target was 1302?
How did I know?
Yes.
Well, besides being psychic.
Besides being psychic.
Right. We actually used the high volume magnet price right over here from 429.
Okay. You didn't use the settlements.
No, settlements are usually areas I'm looking more for a retracement than a target. Okay.
Okay.
So people use pivot levels for targets. They're not targets. They're places to start looking to tighten stops.
Okay.
And
okay.
So like right here, if you go over and you look at, if you pull up 10-minute bars, this is a really simple method. It's actually really, really cool. I did a webinar on it recently. But it's if you go and you pull up just 10-minute bars,
right?
Put volume on it. That's it. You don't need anything else. Okay.
Oh, okay. So
Find the high. I mean, like there's insanely high volume, and there's regular volume, and there's clearly like more than average volume. Okay.
Right.
I mean, it's not a hard thing to see. And so like there's a few bars on here that have really high volume. So the highest price right here we got. Looking at the high volume bar that happened at 9:40, right there we can see that the high of that bar was 13.02. And we go through, and the market's pulling back, doing its thing, okay?
Right.
We're watching it, letting it go through, and then this morning comes up, NFP starts, rolls around, and we start seeing it, move back. And so it does this big push down and gives it up like out of the gate. Just boom, volume. That's, by the way, this is another magnet price right here, okay?
Right.
So it'll be coming back down to 1271 at some point. So we'll be watching for that.
Okay.
But it's starting to move back up, and then the show comes on, it starts up, and it's doing this little thing. We're like, all right, it's ready to go. And I mean, I use multiple analysis methods, so does Tommy. But we're looking at, okay, where is it going to go? Because that's the next step. If you're ever going to do this out of the money binaries, and which you don't see me do a whole lot of them,
No.
But if you're going to do them, I mean, you got to have a very specific reason. And notice I give myself all the time too. I gave myself till 1:30, right?
Right.
And if you're going to do that, you got to have a very specific reason for choosing that. It can't be because I just think it's going to go that far.
Right.
Like it has to be very objective. And so this is like the only method. This I look at like expected movement on each market. So I have like expected movement of every hour.
Okay.
And, for instance, like right here, this shows me every hour the movement I expect on, any given specific market. But I'll look at that, but I'll also combine that with high volume magnet prices. I'll look at deviation levels, but again, I'll combine it with high volume magnet prices. So if I go over here and like I have the deviation levels on this chart, and, we're at 1, 2, and then 3, and... when he said it, I'm looking at it, I'm like, wow, that's a 2 deviation, but it wouldn't be on to 3. If it's beyond a 3, I'm like, it's not happening, okay? There's like a 0.3% chance. But just looking at the velocity, what was going on, I'm like, that lines up with what I'm seeing too. And the number one thing was we both have the exact same price based upon just that high magnet bar.
Okay. All right. Well, thank you so much, Darrell.
Hey, you bet, man. All right. Thanks for calling in.
Have a good one.
Good job on the trade. Enjoy to have that money this weekend. Take some of it out. All right, y'all have a great weekend. I'll see you Monday.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.